In this video, I'm going to be answering some common questions and comments that I saw regarding some changes happening inside of the credit landscape. Now, if you have no idea what I am talking about, it's regards to this video right here. Now, if you haven't watched it, I'm going to pin it. You'll probably see it come across your screen right now. You can go ahead and tap that. I still recommend watching this video first, just because I want to break down some misconceptions or really just answer some questions that I see that a lot of people are asking in regards to some of these changes that are happening, and more importantly, just help maybe create some more clarity around some confusion. And so again, if you haven't checked that video out, go ahead and do so. But with that in mind, let's go ahead and jump into some of the questions that we have here. So somebody wrote DRVB, I'll probably butcher some of your screen names, but 9185 says, no matter what I do, I can't get my score above a 560. The system is rigged against me. Okay, there's a couple things that you want to look at. If your credit score is below a 600, a good back of the napkin math that I just typically do with clients whenever we're taking a look at their credit profiles and we're helping them structure it out so they can get access to business capital, it's what we do around here, is if it's under a 600, odds are we have some negative items on there that we need to start working on removing. That can be either just one item, so that can be a collection, that could be a charge-off, that could be a bankruptcy, that could be even some late payments. I mean, gosh, I've seen people come down from a 750 credit score just off of, get this, one payment. I've seen them go as low as 560, 580, just one late payment. And so that lets me know that you probably have some negative items that are reporting on there, even if you already have some positive accounts. So even if you already have maybe a mortgage that's reporting, even if you already have some credit cards, maybe a personal loan that you've taken, or if you have maybe a personal vehicle that you still maybe have a lease on, or that you leased at one point, regardless of how many accounts, the fastest way to lower a score is by having those negative items still reporting on there. Next up was Joe Horn 1492, and I'm just randomly picking some of these. Again, there was a common thread with some of the questions and comments, and so I want to go ahead and answer that because I think it'll help the majority of us. By the way, if you have any questions or comments, drop them in this video so that we can go ahead and answer those in future videos. So Joe Horn says that sad thing is that if you don't buy anything, or if you don't buy nothing in 7 years, your credit goes to zero, even if you had above a 700. Not necessarily how it works. If you still have, I understand the thought process, but let me provide some clarity. If you have a credit score and you haven't used any of the credit accounts, what could happen, which is what I think Joe's referring to, is you could get your accounts closed out, which is crazy, right? So if I don't need the credit, but then I don't use it, then all of a sudden I get my account shut down just for not using it. Yes, that's known as inactivity. And so is that right? Is that wrong? Hey, that's just the way that the banking world works. So it's one of those things where if you lose, if you don't use it, you lose it. And so it's very much so the same thing here, where if you don't use those accounts, and this is something that even happens on the business credit front that I tell my clients about, which is our specialty. Hey, if you have a $50,000 limit and you got approved for it, you don't necessarily need to use it right then and there. But if you go a long duration of time, and again, every bank is different. Some banks as short as 90 days, some banks could wait a year, some banks can wait 6 months. And so every bank has their own underwriting guideline. If you don't use that line at one point, that's when you start to see them either randomly send you a letter saying, hey, we shut your account down. Remember, this happens both on the personal and on the business front. Or they'll say, hey, we slashed your limit. And so sometimes if you've ever been there, let me know. I've been there before, where I forgot that I even had a credit card. It's just one of those approvals where I got it. Okay, cool. But I never used it. And then all of a sudden I get a letter in the mail saying, hey, we've gone ahead and deactivated your account, which is what I believe Joe is referring to here, where they all of a sudden closed out the account just because I wasn't using it. Now, it wasn't the biggest limit. This was years ago on the personal side. But what does end up happening is that when you get those accounts closed out, if you don't have what we call a thicker profile, so if you don't have at least 3 to 5 accounts or more on the personal side, having an account closure, even if it's just a $500 limit, can drop your score by as much as 50 to 100 points, which again, I'm not saying it's right. I'm not saying it's wrong, but that's just how the system works when it comes to credit, which I saw a lot of comments that you guys had on here, where a lot of the opinions in here, where I think that the credit system needs a complete overhaul, which I agree. I think that some of the pieces with the way that underwriting is done is just crazy. So let me heart this just to let them know that we've gone ahead and answered this question. I think there was another one here. I'll probably swing back. Oh, here we go. That way we know which ones we've answered. Next one, this was an interesting one from Susan, I think Southard. Says, I rent from a private homeowner. How would I be able to have this be seen on my FICO score? Won't the rental company have to report to the FICO credit about my payment history? What if the rental company doesn't want to bother with reporting the payment history? Will they be required by law to do so? So remember what I mentioned, at least in this video right here, and I'm going to give you a tool that you can use to possibly get that reporting over on your side here, Susan. And for anyone that's wondering, hey, like, how can I actually get my rental reporting? FICO scores, regardless of the model, don't use or don't require reporting. So even if you've been renting for 10, 15 years, you're not going to get any of that reporting onto your credit. So you're not going to get any credit, no pun intended. And so it doesn't do anything for your credit score. And this is where I step out of frame for a second and I say, hey, this is one of those instances, again, my opinion, where I would 100% agree with a lot of you guys with the sentiment where, hey, I wish that they reported my on-time payment history, because then the inverse is true. All of a sudden you miss a payment, or all of a sudden you're getting evicted, and that gets reported on your credit. Now, is that to say that you want to be irresponsible? Obviously not. Is that to say that, life happens, people get evicted? Look, I get it, right? That's neither here nor there. But what I'm saying is, like, hey, if you're going to adversely report this on my credit, then I I would hope for the same positive reporting. So let's keep that same energy. Now, when it comes to the Vantage 4.0 score, which is what that change was about in that video, which again, I highly recommend that you watch it. It was to even the playing field. And so essentially what they're doing now is that they gave the government-backed, or I should say FHFA type of products, they gave them the authorization to not just use FICO scores when underwriting someone for a piece of property, but they also gave the authorization, when I say they, I'm talking about the White House, say, hey, you can also use a Vantage 4.0 score. So the way that the Vantage 4.0 score works is that does take into account your rental history, which in this case, if you've been making those payments on time, would 100% benefit you. Now, there's a couple of different companies out there that you're able to pay them a subscription, and I'll go ahead and link it down possibly in the comments so you guys can go ahead and check it out. I know one of them that's pretty popular, which is known as Rental Karma. You can use Rental Karma and you pay them for the service, and it's a subscription, and they're able to report your rent onto your credit report. And so that way you're able to get some of the credit reported, and it's going to help give you a nice bump on your profile. Next question. This was a common one. This was also a good one that I want to address because I see this one quite a bit. Monolabe 4909 paid off my vehicle and mine dropped 55 points. All my score factors are noted as exceptional. There's a couple of reasons why you saw such a big drop, 55 points. And the main reason why this is, I'll give you two main reasons that I see whenever I'm looking at someone's profile. The first one is that we possibly didn't have enough accounts. And so let's put context around that. We probably had less than 5 accounts. That's the first thing that we'll typically see of why somebody's score drops 55 points. By the way, this also happens when somebody makes a big payment toward, again, a big vehicle purchase or a home. So if you've ever paid your home off, then all of a sudden the following month you see, man, my score dropped drastically. Again, that's the first reason. You probably didn't have enough accounts to counteract that, which you would have probably seen closer to maybe a 15 to 20% dip. It still most likely would have dipped, though. That's the main thing. And I'm going to give you the second reason why in this answer. The second reason why you probably saw a 55-point dip is because vehicles and mortgages, so homes or properties, are the two largest debts that we as consumers on the personal side are going to carry. And so obviously a mortgage, unless you paid out the property outright cash, unless you put 90% down, odds are that that mortgage is going to be far greater in terms of the amount than if you just had a couple of personal credit cards. The average credit card is $5,000 to $8,000 as an example, versus a mortgage you can easily tack on $100K like this. And so when that large account is satisfied, in your case, and it comes off of your credit report, and again, interchangeably, either a home or a vehicle, that's why you'll see that big drop. Now, the good news for you, though, is that you should start to see that swing back around. Now, I would wait if you are going to try to apply for any type of credit cards right now, any personal loans, any business credit. You're still in an exceptional phase in terms of you making your payments on time. That's fantastic. We want to keep that. But this would not be the right time to apply for anything new just yet. You want to wait for it to come up and recover. I'll probably take 2 more questions on here / comments that I saw. This was an interesting one as well. And this was from the Unreliable Narrator 64. Says, approved for a house or car. True, but it's gotten so bad that, we want to stay monetized. We won't repeat that a piece of crap $900 a month apartment wants you to have a $650 to $700 to even apply for rent payments. Don't even go on the report. This is true. What happened? What happened to rental history? It's insane. So kind of like the question that we answered earlier from Susan is, yes, you're not going to get it reported unless you use a third-party service or unless for underwriting purposes, and it's really mainly going to take into effect if you're underwriting for a house. Again, at the time of this recording, this could change later on the road as this potentially evens out the playing field, but the Vantage 4.0 score is what's going to report the rent for you. The FICO score is not. But going back to what this person says, a $900 a month apartment, $650 to $700. This has been an issue. I mentioned this in the last video that I did. As a matter of fact, I mentioned it in that specific video where this comment was on, where I got my business to the point where I had in my account right around $45,000, $50,000, but I had ran my credit through the mill. And so when I was going and I was applying for just 1-bedroom apartments at the time, I couldn't get anything either, even though I was telling the landlords and I was telling these rental companies, hey, I can front 6 to 12 months. Money is not an issue right now, because here's the thing. Credit is typically a lagging indicator, unfortunately. And so you can clean up your financial situation. You can be in a far better financial spot than what you were 12, 24 months ago. But the ramifications of what happens to your credit, it's all tailwind effect, meaning what you do to your credit 2, 3, 4 years ago, for some of us, we're still feeling it today in 2025, going into 2026, even though it's possibly something that you did 2017, 2018, 2019, years ago, right? And so it's the same thing here, where one of the, again, lagging indicators, but also a future predictor of how somebody is able to manage their finances based off of the models that rental companies use, is looking at rental history. Because I'm also, I'm not naive to think someone, most Americans don't have 6 to 12 months to throw at rent the way that I did. I understand that. If you're watching this and if you're not in that spot, the biggest lever that you're going to look at and the biggest lever that you're going to be able to flex, unfortunately and fortunately for some of us, is going to be personal credit based on how the system currently works. That's the key word that I want to keep in front of us, based on how the system currently works. I wanted to take one more question / comment. We'll pick this one. SVS Productions 1. There was a short time after losing my job where I missed a single payment on 3 to 4 credit cards, picked up on paying on time right after, and perfect payment history for a decade. Before, with that, was a record of paying off my debt early, but because of that 1 to 2 month period, my score dropped by 300 points. Oh yeah, especially if it's 3 or 4 accounts. And 2 years later, my score still isn't close or back to where that was. Yes, so SVS Productions. So if those late payments are over 24 months old, then you should see them lose their sting over time. And so even if your credit hasn't quite come back to where it needs to be, then here's what I'm going to recommend. The first one, if you haven't done this yet, if the entire time you had been making those payments on time and you maybe went into that small window where you just missed those payments and those accounts are still open, meaning you still have those credit cards, you still do business with those banks or those financial institutions, then what we could do is send a goodwill letter or just give them a call and say, hey, a couple years back, I found out some hard times, and what you have working for you, and we actually just did this with a client not too long ago, so I'm giving you what I told them. If you call them, and if you've been, again, making the payments on time since this moment, I can call them and say, hey, a few years ago, I found out some hard times, but I've been making my payments on time since, as you can see on my record. So I've been trying to make a bigger purchase. I've been trying to purchase a home. I've been trying to purchase a vehicle. Insert like whatever it is that you're looking to do with your credit. And if it isn't this, obviously don't lie. I'm just telling you what I would do if I were in your shoes. If I was going to buy a house, this is what I would do. So I would call. I'd say, hey, I'm looking to buy a house. But unfortunately, due to the fact that I had some late payments and I fell on some hard times reporting on my credit, it's still holding me back from being able to make that purchase. I was wondering, since I've been making the payments on time over the last 12 months, I've been making my payments on time over the last 24 months, I've been making my payments, again, insert your timeline. I was wondering if you guys can remove that so that I can go ahead and not have this affect me and I can essentially move forward with what I'm looking to do. Now, that may or may not work, and it may take a couple of attempts, but sending, and you could also do this in a letter format. Sometimes they'll say, hey, can you send us that in writing? You'll piece it together and you'll send it directly to that credit company. In this case, the financial institution, whoever it is that you were late with. You have, again, a couple things working for you. The fact that you are remaking the payments on time. So if it was one of those where all of a sudden you were making the payments and then you were late and then you defaulted, okay, at that point, we're not doing a goodwill letter. We're beyond that. But in your situation, we're back up on our feet. And we're able to justify that we indeed are in a spot now where we can justify, hey, I've been making my payments on time now. Would you guys mind doing me a solid and removing this from my credit? And so let me know if that works. As always, you guys, drop your questions inside of this video as well. I'll probably select a few more of the questions from the other videos that we have circulating. Just they continue to pile in. And a lot of the questions, I'm seeing a common thread with them. And so I know that if I can answer some of them, it'll serve the majority of you that are asking questions. But if you have a unique question, drop it inside of this video so we can hand select that as well for future content as well. If you have a business and if you need help setting it up the right way, getting it funding ready so you can get access to capital, so that you can inject that capital into your business, whether it's real estate, information technology, e-commerce, whatever it is, we'll love to have a conversation with you. That's what we do with our clients inside of our program. We help them structure out their businesses and help them get access to capital so they can continue to grow and scale. You can learn more about that. I have it pinned down below as the first comment. But other than that, I will see you guys in the next video. Bye.